Welcome back to the deep dive. We're here to really unpack the stories making waves, giving you the context you need. Today, we're looking at something major, a high-stakes geopolitical move, really. Donald Trump's new tariffs on India. And believe me, this is sending ripples across global markets. It's not just about economics, is it? It seems to be forcing Delhi onto this difficult strategic tightrope, balancing old allies with new ambitions. So our mission today is to lay it all out. The what, why, and what now. What are these tariffs exactly? Why is this happening now? What are the likely impacts for India's economy, its markets? And of course, how is India responding? We've gone through a whole stack of recent articles, economic analyses, official statements, really trying to get you a clear picture. So let's get straight to the announcement itself. What exactly are we talking about here? U.S. President Donald Trump has announced a pretty hefty 25% tariff.
And an additional penalty on top of that.
Right, a penalty on a whole range of goods coming in from India. And this isn't theoretical. There's a date, August 1, 2025. That's, not far off.
Exactly. And what's really significant here, I think, isn't just the 25%. I mean, yes, tariffs are basically taxes on imports. But these feel different. They seem like a deliberate friction point, almost designed to, reroute supply chains and maybe force countries like India to make some tough choices about who their partners are economically and geopolitically.
So that 25% makes Indian goods much more expensive in the U.S.
Significantly more expensive, yes, making them less competitive. It's economic pressure, but there's a clear strategic goal behind it, it seems.
Which brings us to the big question, why now? What are the reasons the Trump administration is actually giving for this? Because looking at the sources, it feels like there's more than one thing going on.
Oh, absolutely. It's multifaceted. It's not just about trade deficits this time, or maybe it never was just about that. The first reason, the one they state most directly, is market access. The U.S. is saying India's market is, quote, too closed.
Too closed, meaning?
Meaning they feel American companies can't get in easily. They argue India puts very high duties on U.S. goods, making it unfair competition. It's a familiar trade argument, but it fits into this larger picture.
Okay, so that's the trade angle. But then it shifts, right, into geopolitics. And that feels like maybe the sharper edge of this whole thing.
I think so, too. The U.S. has been very open about objecting to India buying so much oil and military gear from Russia.
Right, that's been a consistent point of friction.
And the argument they're making is pretty direct. These purchases indirectly fund Russia, money that, they claim, helps Russia in the Ukraine war.
So they're directly linking India's energy and defense choices to the conflict in Europe. That's quite a statement.
It is. And what's fascinating, really, is how this shows an evolution in U.S. policy, or at least under this administration. It's moving beyond just transactional economics. You've got market access complaints, sure, but then layer on geopolitical alignment concerns and even worries about which international groups India is part of. It suggests a really comprehensive rethink of the U.S.-India relationship.
So future trade deals might hinge on foreign policy alignment, not just dollars and cents.
It certainly looks that way. Strategic alignment seems increasingly important.
And you mentioned international groups. There was a third reason cited, maybe less expected. India's role in BRICS. Trump apparently said India's involvement there is seen as anti-America and influenced this tariff decision. Just to remind our listeners, BRICS is Brazil, Russia, India, China, South Africa.
Yes. And why anti-America? That's the crucial part. From a certain U.S. perspective, BRICS is often viewed as a bloc of developing nations aiming to challenge the existing, Western-led global order.
Like the World Bank, IMF, that sort of thing.
Exactly. Pushing for a more multipolar world. So when India actively participates in a group that includes strategic rivals like Russia and China, well, from the U.S. viewpoint, that clashes directly with their goals of, say, consolidating alliances and isolating rivals. It becomes a battle for global influence.
Okay, let's dive a bit deeper into that India-Russia relationship then, because it's clearly central here. This isn't some new fling. These ties go back decades, right? Very comprehensive defense, energy, trade.
Decades, absolutely. And Russia isn't just a trading partner. They're India's fourth largest.
And a huge chunk of that recently has been about cheap oil.
A massive chunk. Our sources say something like 35% of India's total crude oil imports in 2023-24 came from Russia.
35%, that's huge. That's a significant dependency.
It is. And what's interesting is that this isn't just about getting a bargain, though the cheap oil is obviously attractive. This reliance, it has roots in the Cold War. Back then, India often didn't have strong Western support, so Russia, or the Soviet Union then, became the reliable partner for defense, for energy.
So it's a legacy relationship, not just a current transaction.
Precisely. It's a legacy of geopolitical necessity woven into India's strategic fabric. It's hard to just switch that off overnight, especially given real energy security needs.
But for the U.S., it's about cutting off Russia's income because of Ukraine.
Exactly. And India's continued buying, driven by history and economics, complicates that U.S. goal significantly. It really shows national interest sometimes overriding alignment.
Okay, now add another piece to this puzzle. The U.S. just announced a new oil deal with Pakistan.
Yes, that was interesting timing.
And Trump even hinted, apparently, that Pakistan might eventually sell oil to India. What's that about? Is that a pressure tactic?
It certainly looks like a strategic move. By suggesting Pakistan could supply India, the U.S. is basically offering an alternative route.
An alternative to Russian oil.
An alternative that conveniently bypasses Russia, which is under Western sanctions. It's a way to potentially shift India's energy reliance and maybe its strategic orientation over time.
So, dangle an alternative, potentially drive a wedge between India and Russia using energy policy.
It's a subtle but potentially powerful lever. It really highlights how much geopolitics can be played out through energy deals. Fascinating stuff.
Okay, so bringing it back to the immediate impact, what does all this mean for India on the ground? Let's talk economics, markets. We're hearing these aren't minor bumps. Economists estimate these tariffs could knock 0.5% to 0.7% off India's GDP.
Yeah, those are the projections floating around.
And translating that, it's roughly $30 billion.
Approximately, yes. Around $30 billion in potential loss. For a growing economy like India's, that's a substantial hit. You can't just shrug that off.
No. And which sectors are likely to feel this most acutely?
Well, the analysis points to specific export sectors that are heavily reliant on the U.S. market. Think textiles, auto components, gems and jewelry, pharmaceuticals, even some IT services potentially.
So companies in those areas, especially those selling a lot to the U.S.,
They could see a significant impact on earnings, potentially on jobs too. Imagine you're running a textile factory, heavily exporting to the U.S. That 25% tariff could wipe out your margins
right,
or make you uncompetitive overnight.
orders could just shift elsewhere.
Exactly. Buyers might look to Vietnam, Bangladesh, other places. And that impact can ripple through the supply chain, affecting smaller suppliers, employment, even consumer confidence domestically. It's quite interconnected.
And beyond specific sectors, what about the broader economy, like the currency?
Yeah, there's an expectation of pressure on the Indian rupee against the U.S. dollar. If exports suffer and the trade balance worsens, the rupee could weaken.
Which could then lead to foreign investors getting nervous.
Potentially, yes. A weaker currency, combined with trade uncertainty, might lead some foreign capital to withdraw, seeing increased risk or lower returns. That adds another layer of economic challenge.
Okay, so that's the potential economic hit. What about the immediate reaction? Did the markets blink?
Oh, they didn't just blink, they flinched hard. The Indian stock markets, both the Nifty and the Sensex, saw sharp falls right when they opened after the news broke.
A clear sign of investor worry.
Definitely a gut reaction.
And what about the gift nifty? Because that often gives a sense of international sentiment, right?
That was particularly revealing, yes. The gift Nifty trades internationally in Gujarat's financial hub, so it reflects how global investors are seeing India before the main Indian market even opens sometimes.
Yeah, and it dropped significantly.
It plunged roughly 160 to 180 points down. That's a very strong signal that global investors immediately factored in higher risk and uncertainty for India.
So they're expecting more volatility, maybe pulling back a bit.
It suggests an expectation of continued turbulence, yes, and maybe a revaluation of risk for India-exposed investments, at least in the near term.
Interesting. Now, within the Indian markets, you mentioned broad declines, but was it uniform across all sectors?
Not entirely. It was a bit of a mixed picture, which is also revealing. As you'd expect, the sectors heavily reliant on exports took the biggest hit.
Textiles, pharma, auto component.
Exactly. Those indices were down sharply. But interestingly, sectors like IT and FMCG, fast-moving consumer goods, held up relatively better. They were more stable.
What does that stability tell us? Are they just less exposed to the U.S.?
It likely suggests a couple of things. They might be less directly dependent on U.S. goods exports, or perhaps they're seen as more driven by domestic demand within India, which makes them seem more insulated from these specific tariffs.
So the domestic economy buffer.
Right. It highlights that India's economy is diverse. While exporters face headwinds, domestic consumption or global services might be more resilient. It does raise a key question, though.
Which is?
How quickly can India pivot? If this U.S. pressure continues, can they diversify their export destinations effectively? That's a big strategic challenge.
Absolutely. The multi-billion-dollar question, really. So how is India officially responding to all this? What's the government saying?
Well, the official line so far is cautious but firm. The Indian government says it's studying the U.S. decision very carefully.
Diplomatic speak for we're figuring out our next move.
Pretty much.
Yep.
Their public statement emphasizes taking all necessary steps to protect national interest.
And they singled out specific groups.
Yes. They specifically mentioned safeguarding MSMEs, the micro, small, and medium enterprises, along with farmers and other industries that could be vulnerable. It's a signal about protecting the domestic base.
Okay, so protectionist signals, but are they slamming the door on talks?
No. Interestingly, they've also said India remains committed to continuing trade negotiations with the U.S.
But with a condition?
A very clear one. They stated they won't accept any deals perceived as biased or unbalanced. So the door is open, but they're saying it has to be on fair terms.
That's a delicate line to walk, isn't it? Protect domestic interests, signal firmness, but keep diplomacy alive with a major power applying pressure.
Extremely delicate. You're balancing domestic political needs, showing strength, protecting vulnerable sectors, especially with elections always somewhere on the horizon against the realities of international diplomacy and economic interdependence. Holding firm against an unbalanced deal while under direct economic pressure. Well, that's the essence of this strategic challenge for India right now. It's a high-stakes negotiation.
Feels like a game of chicken almost.
You can certainly see it that way.
Okay, so let's try and wrap up this deep dive. We've seen President Trump's new tariffs, 25% plus a penalty, starting August 1st, 2025, driven by a mix of U.S. concerns. Market access in India, India's strong, long-standing ties with Russia, especially oil and defense buys, and even India's role in groups like BRICS.
Right, a complex web of trade and geopolitical factors.
We've looked at the potential economic fallout, a possible GDP hit of up to 0.7%, maybe $30 billion, pressure on key exports like textiles, autos, gems, pharma, and maybe the rupee, too.
And the immediate market reaction confirmed those worries, sharp drops in Nifty, Sensex, and especially that international barometer, the GIFT Nifty.
And finally, India's response. Studying the move, vowing to protect national interests, particularly MSMEs and farmers, while keeping the door open for trade talks, but only for a balanced deal.
It's definitely a complex situation. You've got U.S. domestic politics likely playing a role, consistent diplomatic pressure from Washington, all set against the backdrop of the Russia-Ukraine war influencing global alignments. It really underscores how tightly woven global economics and political strategy have become. India's sort of caught right at the intersection of these powerful forces balancing history, necessity, and future ambitions.
So it leaves us with a pretty big thought to ponder, doesn't it?
I think so. Given everything we've discussed, the tariffs, the reasons, the reactions, this whole intricate dance, how might these kinds of pressures reshape global trade relationships and alliances in the years ahead? What does this mean long-term for how major powers like India and the U.S. pursue their national interests when economic tools are used so directly for geopolitical ends? And how will other nations adapt? It's like watching a global chessboard where the rules are subtly changing. Definitely something to keep watching.